Ahoy there, traders. Ahoy, ahoy. Where are my slides? There we go. Ahoy there, everyone. How are you doing? Happy Thanksgiving if you celebrate it wherever you are in the world. Drawing pencils. So, if you're looking for stuff about swing trading stocks, the stock markets, and generally just how to profit from stocks that move up or down, then you're in the right place. So, hey, Randall, Steve. Hello, Peter. Lorez, Ruben, Vito, Adrian, hello, Bal. So, right, let's rock and roll. I'm going to guess it's going to be one of two extremes there. You're either going to have a huge full house, or we've just got the hardcore regulars like all of you who are braving a Friday morning. Most of you are in the US. Let's come and nerd out about some charts. Given the what was going on in the markets, I thought we'd just take a little look, and the narrative that I'll be looking at things through will be crash test stupid. Is the market crashing? Do we need to do anything about it today? Should we panic? You know, all those things that come up when the markets not necessarily crash, but just when they move fast and unexpectedly. So I think that's just the thing to keep in mind. I'm not panicking, just for reference. I'm going to do my session, and I've got a nice long weekend planned with Mrs. Newton. So we'll be going pretty much out. I'm not worried about the markets for lots of reasons. I've got plenty of hedged positions on. If anything, if the market was to crash and we have a genuine Black Friday in the markets, I'm not concerned in the slightest. It should actually be beneficial if that was to happen with the way that we set our portfolios up. Anyway, we'll explore that later. I'll just give everyone a moment or three to log in if they were just having some delays, and it looks like we're all here. So hello, hello, hello. If it's your first session, the agenda goes a little something like this. We're going to talk about the charts for anywhere up to about 60 minutes, sometimes a little bit over. It depends on how chatty and talkative I am. I'm just going to do a quick 2-minute intro for if you are new to these sessions and you've never heard my weird accent before. And before anyone asks, no, I'm not Australian. I actually got asked that the other week, despite my quirky, weird accent. We're going to look at the stock market. We're going to look at specifically at crashes, and we might introduce ourselves to Mongo's Guide to Crashes, which is my alter ego. Not that I need one. I've already got multiple personalities. Nonetheless, Mongo is just a rule follower. Mongo smashes button when the market says to go. So that's what I try and do. It's just my anthropomorphized strategy, essentially. It's, when this trade sets up, the trade goes on. As one of the issues that we have as, humans, is our inability to follow rules and guides. I've spent many years creating rules, and it's just human nature for us to delay things. And, and this is often why we mess up. So, the last sort of 12, 15 months, for me personally, it's just been the trade sets up, it's going on. I'm trying to be as systematized in my decision-making process as much as possible, and just automate the decisions, not necessarily the actions. I think I said this to one or two of you in the week. It's not necessarily the action of doing something that we're trying to systematize. It's to automate the decision-making process, so that if something similar happens again, like right now, crashes, corrections, the market's being weird, we've got a laundry list of things that we can do to say, next time this situation happens, I'm either already well prepared, which is what most of my traders are, for the eventuality of a sharp corrective move. And if you've been following these Friday sessions, we were actually looking at the possibility of a correction 2 weeks ago. So anyway, I'm kind of getting into the weeds a little bit, but nonetheless, how to get maximum value out of today's session? Like, comment, interact. I've got the chat box on my other monitor, so if I see the question it's relevant, I will ask, or I will see it asked and answer it accordingly. And again, as I mentioned earlier, if you are new to these sessions, my name is Phil Newton. I've been a trader and a mentor for over 25 years, 28 years actually. In fact, I'm not a Wall Street guru. I am just a regular guy I like to give back to the community as much as possible with these Friday sessions. I found my own measure of success. I like to enjoy my time away. As I mentioned, I'm pretty much going straight out with the lovely Mrs. Newton to go and enjoy my Friday and my Saturday, my Sunday, my free time. We were out on Thursday enjoying ourselves. I want to enjoy myself, and I appreciate that I'm really fortunate, but it's all because of trading. The stock market and the financial markets has created an opportunity for me to enjoy myself and do whatever I want to do on my terms. It's all because of what I now refer to as production line trading. Just like a factory, you're going to put everything that you know in the front end, the raw materials, we're going to put it through the factory, and along the production line of the stock markets, we should have a trading setup, a management process that gets utilized. So from here on out, I'm going to attempt to try and show you as much as possible as what I do in the short time that we have available today. Again, I've helped a lot of people over the years, just like we've helped Emily, one of my newer, more recent success stories, who says, since I've been in this program, I'm finally seeing results. I'm taking small risk trades, but making a profit slowly but surely. She also went on to say that hearing other people who pick up the same trades or agree with my reasoning meant that I wasn't just guessing anymore. And that's one of the issues that we tend to see, or certainly I've seen over the years, is without structure, without a production line, it can feel like that you're guessing. And again, we've helped many people, not just Emily, we've helped Steve, helped Anik, helped Joe, helped Kyle, helped Colin, and literally thousands of people with my programs through the these are just from this year, all get production line results. I'll have a good read, a ramble, coffee, and I've got a strange affiliation for flamingos. I've just ordered some artwork, so maybe I'll turn the camera on next time. You can have a look at my fancy flamingo artwork. And you can see my weird obsession with flamingos. As mentioned, I have cracked the code on what I refer to as production line trading. There's three elements to this. There's a mechanical scan, visual confirmation, and then we've got the tradecraft, the entries, the exits, the stops and targets. They're probably the more important parts. If you would like to work with me on a more formal basis, at some point you may be invited to work with me. There's no pressure. Again, I do these Friday sessions, you get a lot from them. But if you want to work more closely and speed up your learning curve, there is an opportunity to work with me. There is an application process. It's not right for everyone. And if it isn't right for you, I'm quite happy to tell you, and I'll always point you off in the right direction. I've actually just had to do that recently. There was a lady I was speaking to last week, actually, and it wasn't right for her. You know, she just wasn't what I do. Wasn't what she was looking for. She was looking for something more of an investment approach. I'm not an investor. I'm a trader. I'm going to profit from swings in the market. That production line, again, is 3 stages. We have a mechanical scan, a mechanical assessment. We're going to focus on that today. We're going to look at visual confirmation. We're going to focus on that today. And we generally touch on the tradecraft. There's a lot involved with it. We usually just don't have a great deal of time to go in any depth on the tradecraft, but we can easily find entries, exits, stops, and targets within reason. So let's go and do it. Today's main event is crashes, crash test stupid. If you're thinking about the market's crashing and the holy shit, chicken little, sky's falling, boo-hoo, look at my portfolio. If you're in that mode, then something's going wrong, not necessarily with the markets, but with your strategy. If you're not prepared for the eventuality that something could happen, then you're doing it wrong. One of the things that I try and teach all my traders is, I caught myself saying this a few times, it's essentially I'm trying to teach you, a part of what I'm trying to do is teach you critical thinking. And instead of being right, and we've got to let go of the ego. So instead of being right, for example, I bought the dip, I was right, it went up, I made money, look how great I am. I don't want to do that. Like, that'll make you money. But what will piss you off more is if you're not right, if it doesn't go up, if it loses you money, if you mistime the trade and it loses money, you get stopped out and then it carries on doing what you're doing. You know, your viewpoint was right, but you just mistimed the entry. And again, note the way I'm saying these things. It's not about being right or wrong. And sometimes I overlook this in that it is a binary event and it's not a binary event at the same time. We're trying to make and automate decisions around essentially trying to guess what's going to happen next so that we can systematize that process, the thought process, buying the dip at an appropriate points. Again, we go through this most weeks, but it's the decision-making process and the I completely lost my train of thoughts. What we're trying, oh dear, it's one of those days. One of those days. It's Friday. I'm looking forward to my afternoon out. That's what it is. But it's trying. Oh, there we go. It's there we go. There's that squirrel that I started to chase. It's and I lost it again. It's the decision about being right or wrong should be left alone. That's what we're trying to avoid. It's not about being right. It's not about being wrong. Again, 2 weeks ago, we were looking at this saying, you know what, the Dow looks crystal clear. It's at a key location that might suggest a sell-off. And that's exactly what we analyzed. Now, it's not about being right or right. It's even right down to where we thought it was going to come, probably about halfway through this range or this expanding triangle that we analyzed. And we looked at this a few weeks ago. Now, while I was right on the analysis, what most people forget is I spoke about scenarios, and that was the points that I eventually was trying to make. Yes, I can have my bearish hypothesis come good and true and can profit from it. And again, so we're well prepared, well in advance of that eventuality. I can position my portfolio to the point where if that was to happen, it should be a profitable event. But if it doesn't happen, and this is the key, if it didn't sell off and prices carried on moving higher, then we also spoke about that as a scenario. And if you remember, if you were here, we spoke about it as a secondary scenario. So what we want to be thinking about, instead of thinking in terms of right or wrong, up and down, let's think about the scenarios that can happen. An instrument can do three things at any time. Firstly, it can stay still. Secondly, it can go up. And thirdly, it can go down. So this bit in the middle, the staying still, this is what makes it not 50-50. Just like having a zero on a roulette table. You know, you're going to bet black, you're going to bet red. But it's that pesky green, the zero. It can land on zero. It can go nowhere. That's what makes it not 50-50. And the reality is it can go up, down, or sideways at any given moment in time. And let's define sideways as in a range. It can be stuck between 2 points. Arguably, that's what this is. We're stuck between 2 points. We're in a range. It's not really trending. It's not really going up. It's not really going down. It's kind of somewhere in the middle. So let's just call that a consolidation. So when that is in mind, the probability of being right on direction is 33.3% recurring. It's not 50-50. So there's the first thing that we need to do to understand this concept. It's not about being right. It's about scenarios. It's not about if it's not going up, it must be going down. It doesn't exist. Because if it's not going up, well, it might just go sideways for a while. It might go down for a while. And this is the only time you'll hear me say a vague might. It might do this because I don't know what's going to happen tomorrow. So what we need to do to combat this, and this is pretty much built into my strategies, the way that I approach things, is we want to start thinking about scenarios. We want to start thinking about scenarios. And this means that we're not then chasing the sell-off. We're not thinking about closing the barn door after the horse has bolted. We're not waking up today and going, holy shit, the stock market's crashing. Oh my God, look at my portfolio. You know, you're not taking action after this. You're not going to be taking action when the market opens, because we should have been taking action over here, because we were preparing for the eventuality of the possibility, because 2 weeks ago we thought about scenarios. So what were our scenarios? Well, we drew our analysis as best we view it, best we saw it. And we said to ourselves, you know what, price is in this expanding range, this rising wedge is sometimes referred to. It could be called a cone, might be somewhere, depending on where you read about it, but essentially it's expanding volatility. The way I like to view things, I'm trying to recognize first and foremost, what is the trend? It is contained with a defined upper boundary and a defined lower boundary. Therefore, it must be range bound. So I'm trying to make that decision-making process, an algorithm, a yes or no system, so that I can know what to do next. So then the next thing is, when I've recognized that it's one of my 6 money-making patterns in a range, where's price? It's at the upper end of that range. The range being this, let me just make it thicker so it's easier to see. This upper black line here, that is, or what we determined, let me just zoom out, that was our boundary. And that's been on for many, many months. So again, if you're following me for any length of time, you'll know that we knew where that boundary was all the way down here. So when it gets this upper boundary, we can say, you know what, price is at the upper boundary of this resistance, this consolidation zone. So now that I know that, it's going to tell me what to do next. So the primary scenario that we were running through, and again, last week we went through this as well as the last few weeks, the primary scenario is we've got one of our lovely little V-shaped patterns. It's rallied up to, poked its head a little bit above, it's come back below this boundary level, and we've got this, you know, rejection in the underside. It's now back inside the range. And what we said last week was if it went below the apex of this V that I'm drawing, the head and right shoulder, the net of the head and shoulders pattern. I'm just trying to be descriptive in case you've seen it in a different way. Sometimes this is known as a 1, 2, 3 pattern. I refer to this as a V-shaped pattern because if you draw it as a line chart, it looks exactly like a V. It makes it nice and easy to find. So when it went through that number 2 point, as I've marked off, we can be bearish. We can be specifically bearish at the range high, because one of our 6 money making blueprints is to recognize that price is range bound. Then we say, where is price? Oh, it's at the upper edge of the range. Great, I can start looking for those V-shaped patterns, the 1, 2, 3, and that's exactly what happens. And we can trade it from the boundary highs, ideally to the boundary lows. Now, because the pattern's a little bit different, one of the things that we said is that maybe a smart place to be would be to aim for somewhere in the middle. I didn't think that we would see price come all the way down to the range lows, but somewhere in the middle would make sense. That's what we assessed, and that's exactly where we are right now. So for most people, including myself, this is now a buying opportunity. Anyway, let's backtrack. So crash, should we be chasing the crash and trying to buy protection or fix the portfolio? No, because we prepared for it a few weeks ago. Now, this is what I'm referring to, just come back to the point. This is the primary scenario. So if that was to happen, remember, I didn't know it was going to. I'm not going to thump my chest and say, look how clever I am. This was the primary scenario because this was the most likely thing to happen. And for anyone, if you remember, we said, well, if it carries on going up, this, let me just put the numbers back on, 1, 2, 3. If price went back above the number 1 points, then this reversal pattern, this gets voided, it gets nullified, it gets put on the back burner. It's now not valid anymore. So now it's a case of, okay, the primary scenario is bearish because price is inside the range as this pattern was developing, a reversal at the range high. It's a statement, but I'm not married to it. And that's the point. That's the trick that most newer traders miss. If it was to go down, I'm going to be made up. I'm going to be happy. But if it doesn't go down, specifically, if it goes above the number 1 points, I can nullify the bearish pattern, the primary scenario, and start thinking about a secondary scenario, which would be a breakout. Technically, that would have been, you know, if we ignore that for a moment and say, well, what if the price had carried on going up? That would have been the breakout. So then we can start saying things like, okay, well, now the primary scenario is off the table, the reversal, price is back above the range high. I've got a pullback, which is a typical continuation pattern. And as price evolves, I can now revert to that being the primary scenario. And if that was to have happened, we would have been talking about that scenario this week, saying, hey, price has gone up, we bought the dip, blah, blah, blah. All those trade setups that we were talking about as potential candidates last week and the week before on our short watch list of trading opportunities would have probably been going up and up and up. But as it is, the bearish hypothesis, the bearish scenario came good. So now when we start thinking in these terms, what are my scenarios? What are my choices? I can start thinking about scenarios. And one of the lovely things about consolidations that I like is you've always got an each way trade, an each way scenario. NVIDIA is a good example. NVIDIA, why is it a good example, Phil? Because price has been consolidating. Earlier on in the year, price is in a range. So when it gets the upper boundary, the lower boundary, same scenario. There's those V-shaped patterns, a little bit of a wider sweeping V there. But price is in the upper or the lower boundaries. You know, price did that V shape, it went back in, came back to the middle. That's a great sign that it doesn't go all the way down. You know, price breaks out of the range again. We can start looking for these scenarios. And it all revolves around, where is price in the context of the range? Okay, great. If it's still inside the range, I've got to be bullish at the low, bearish at the highs for the reversal. Price continues to oscillate back and forth. But when it's outside those boundaries, I can start looking for breakouts. Again, a real-time example is BHC. Let's check it out. BHC. This is Bausch Health, is how you pronounce it? Who cares? So let's think about scenarios. Let's think about those same things. Should I be bullish or bearish? Well, let's say in the last almost 12 months, what's going on? A little bit of a sloppy range. We've got multiple crosses in the average price, so we know that it's range bound. Largely, I can ignore the moving averages and just recognize the phase of movements. So we've got this containment zone here to say, price is contained. I'm going to call it a consolidation. I'll often default to horizontal ranges wherever possible, just to save the confusion of, did I draw the trend line right? So we can start asking ourselves again, now we know where the range is. And let me just flip over to the line chart. We did this last week just to try and explain, why this level as opposed to any other level. All I'm trying to look for is, do we have multiple touches at the highs? Yes, we do. It started off sloping there, but it's meandering sideways, more horizontal here. So I'm just looking at the fact that, we've got one touch there, two touch, kind of artistic license, just excluding that there. But if you wanted to include it, that would be fine. If you're brand new to drawing consolidations and ranges, I would arguably say maybe the wider range would be more suitable. Again, I'm just using a little bit of judgment on my behalf. I've seen these things many times before, so I'm just using that as my boundary low. So with that said, I can say, okay, well, now I know the trend in the short term. Let's put the time horizon in the last 6 months. Always put a time horizon in the last 6 months. What is price doing? Well, it's in a range, very clear. We're all in agreements. Fine. Let's not worry about the name of the pattern. We could certainly call this a descending something or a contracting whatever. It doesn't matter. Just mark off the boundaries. Keep it simple. Keep it horizontal. And then now we can say, well, where's price? It's at the range low. Great. Now, what is my primary scenario? Okay, great. Well, if price is at the range low, I'm looking for a reversal. I'm looking for a pattern that looks something like that in a perfect world. I might not get it because on this occasion, I can see that price tends to turn very fast. So maybe I'm not going to get it. But if I was able to trade it, then I'd be looking for a price action entry. Now I know what to do next. So that's a primary scenario. Secondary scenario is, well, what if it goes below the low there? That would be a pullback entry. I can trade a bearish continuation, or in this case, a bearish breakout of what I've defined as the range. Great, that gives me scenarios. So when you plan for eventualities, it's now not about being right or wrong, which really trips people out when they get it wrong. And it's through no fault of anyone's own, because no one knows what's going to happen next. I've been wrong more times than I'm right. And yet 28 years later, I'm still here making money. So it's not about being right. It's not about being wrong. It's just about planning scenarios, planning for eventualities. Like being in the Boy Scouts, always be prepared. So when you have that in mind, you can start to put some structure on the way that you view the charts. As a chartist, as a technical analyst, and to be fair, arguably even as a fundamentalist, that sounded a fundamental trader is what I meant to say, not a fundamentalist. You know what I mean. We can start to say things like, okay, until something new happens, which is one of my favorite phrases, until something new happens, the same thing has to continue. And as a trader, specifically when we're looking at the charts, again, now we're looking at Apple. We've got the same scenario here. We've just closed some good trades out on Apple. It took a little bit while to come to fruition. So let me just put that in the background for a moment. So there we go. I've got nothing open on Apple just for reference. I'm just tidying the chart up while I'm here. Okay, great. So now what we can say is we've got Apple. We're looking at it right now. What is the primary scenario? Is it doing? Let's come back to one of our 6 money making blueprints. Is it going up? Number one. Is it number two? Going down. Number three, is it in a range? Is it in a range? And if it is in a range, is it at the range low? We can look for a reversal. If it's at the range high, we can look for a reversal. If it's above the range high, I can look for a breakout. If it's below the range low, I can look for a breakout. So there we have our 3, 4, 5, 6 money making patterns. Great, that's it. The other two that I don't often talk about are counter trend, but we still need to know what the trend is, up or down, to be able to trade counter trend. So there's another 2 patterns. I just don't like doing it. It's nothing wrong with it. It's just personal preference. Some of my students, Kevin, are you here, mate? I'm just looking down the list. No, Kevin's like really hit the ground running, trading counter trend. It's personal preference. You're like, I don't like doing it. It doesn't feel good for me. It's like wearing shoes with different sizes. It doesn't feel right. You know? So what I'm trying to figure out always, and every week we talk about this, is now you're looking at the charts. What is price doing? Because we've got to then presume that until something different is identified, then the same thing is going to continue. The same thing is going to continue. So back here, I was saying that we were in I was calling this a horizontal consolidation back here, and I was looking at that as a breakout. So hopefully that'll explain that trade there. I thought that was a breakout. But with new information, actually, I misidentified it. I'm not married to the breakouts. It's just with new information, my viewpoint changed. It became very clear, very obvious that I'd neglected to identify the sloping line. I'll always look for the horizontal consolidation. Again, I was looking at that there as a short-term breakout. As it turns out, price evolves. And this is the bit that textbooks don't tell you. Price evolves. It is continuous. So with new information, we're going to occasionally need to evaluate it. If you're evaluating or specifically reevaluating things every week, then your analysis is flawed. This analysis has been on for a few months now, since back here, you know, when I identified that something different was unfolding. So this has been on for several months. If you can follow me, you will have seen it. So now that we know, now we're looking at this chart, what is price doing? Well, it's doing 2 things. It's going up and it's contained. Great. This is one of our patterns. This means that it's doing both the trending and the ranging thing. We're going to call this a rising channel. So I'm going to default. I've got to call it one thing so I know how to treat it. Because it's contained, I'm going to call it a consolidation. Now, what I can also do, because it's also moving upwards, I might ignore the range reversals. I might ignore the bearish trades. It doesn't really matter. It's just, if you want to just trade the channel in the trend, you can also do that. So you take 2 choices off the table, and we're going to explore all 4 right now. So what is the trend? Now I'm looking at it. It's going up. It's in a range. So I'm going to call it a rising channel. Name doesn't matter. I'm just using it to describe what we're looking at. So now that I know that, where is price in the context of the rising channel? Actually, it's just a little bit above the boundary that I've marked. Interesting. So the primary scenario here is bullish. Let me pause there for dramatic effect. Drum roll, please. Clear my throat. I'm going to take a glass of water when I answer the question. What's the primary scenario? Is it bullish or bearish? Well, it's bullish because price is above the boundary as I've defined them. And I've got to be bullish until something new. I've got to be bearish in a range until something new happens. This is what something new looks like. Price is above the range. That's a fact. No one's in denial. So my entry for a bullish trade would be bullish above the pullback high, because I'm going to trade the first pullback after the breakouts. Does that make sense? Let me just pause there. So this is what I mean. Primary scenario. Secondary scenario, guess what? If it goes back inside the range, I can trade the next pullback bearish, and that'll be my reversal V that we were just talking about, just like it did over here. Does that make sense? Again, coming back to my very loose points, scenarios is what we're talking about. It's not about being right. It's never about being right or wrong. And if we can just let go of our ego for just a moment, and just like, if we were running a business on the high streets, it wouldn't be a case of like being right or wrong. It's just about following the process, doing the marketing, make sure that the cash register's got cash in, make sure you've got floats, make sure you've got staff, make sure you've got the doors are open, the lights are on, the place is tidy. You're ready for business. And if you happen to get customers that's perfect because that's what we want. But there's no ego involved with we got 20 customers today, therefore my business was right. No one thinks that way. But yet suddenly in the trading world, if you're following a process, it's not about being right on direction. It's just that you've followed a plan successfully. So if we follow a plan and we think about scenarios, you'll always be right because one of those scenarios is going to come good. It's almost like tricking the minds. You're always going to be right no matter what happens when you think about scenarios. I've got to be bullish on the breakouts because something new is developing. If it comes back inside the range like it did over here, there's the breakout, break back, there's those V-shaped patterns. If that was to happen over here, then I can have a secondary scenario and say, okay, well, it's reverting back to being in a range. So I've got to revert back to it being bearish at the range high. So one of the reasons why I love consolidation patterns is you always get an each way trade choice. You'll always be right. Unsurprisingly, it might go up, it might go down, but we can trade those patterns if they're clear, if they're well defined. Okay, the markets have just opened. So we'll be in about a minute. So what's going on? The markets have been down 800, or certainly on the Dow's point of view, about 800 points or so. Should we panic about the crash? Well, it's still going down. So coming back to the crash, what should we do about it? Well, if you're doing something today about this, it's not the right time. You've missed your opportunity to manage your positions, to manage your portfolio. You could also use futures. Again, I tend to look at the futures. The futures, the Dow Jones, S&P, the NASDAQ, the Russell, they've all got Globex. They're all traded on Globex, and that trades for about 22 hours, and it's almost 24. But it trades most of the trading day. So if you need to hedge off, if you're worried about the sell-off, if you were worried about that yesterday, you could have done something about it, is the point. You could have done something about it on the futures market. So although I'm not necessarily trading stocks, I can hedge with different instruments. I don't have to trade stock. I don't have to trade options. You can use futures. If the contract size are going to appreciate, everyone's got different account sizes. This is the mini futures, is one of the more liquid, but you've also got mini micro futures. So the contract value means that on this particular contract, every 1 point move up or down is worth $5, but you've got mini micro futures. So every 1 point move up or down is worth 50 cents. So if you've got a smaller account, you can use what's called mini micro futures. Again, check with your brokerage. They're pretty liquid. And again, great if you've got a smaller account or you just want to put a little bit of an overnight hedge on. If the market starts moving and you happen to see it, you can do it. Again, I'd come back to my original comments on this. If you're thinking about doing something today, after the move has happened, don't worry about it. You're just gonna have to sit through a retracement, and it's just a sad fact. It's only a one-day sell-off so far. I don't think it's a crash. I don't think it's anything to worry about. From our point of view, it's come down to where we thought it was going to come. It's about the middle of the range we said about here. If we go to the S&P, doing everything backwards today, going through the markets. Again, we've got multiple touches, similar pattern here, looking down and left, at that rising channel. I don't think it's going to come down dramatically. We suspected maybe about 45. Last week it was here, because of the dynamic point, it's a little bit above 4,500 now on the S&P. It could still move a little bit lower is the point. Again, I'm not overly concerned. The S&P is pretty strong. NASDAQ has take a little bit of a pummeling, or has it? In context, it's not really doing very much. So this big one-day sell-off that we've just been commenting about, the overnight futures are tumbling. Certainly on the Dow, it's taken an absolute thrashing. The NASDAQ's already recovering. That's interesting. So now I'm looking at the futures. I'm thinking there might be a little bit of a short-term opportunity. NASDAQ has recovered. It's not impacted in the same way. S&P is up, down 1.3%. It was down 2%. Russell is down 3%. So I'm just looking at the percentages. I'm trying to think, is there actually a short-term opportunity? Especially if you're bullish, which I am. And look at that. There's the Russell. Russell's come down to, do you remember a couple of weeks ago, we were talking about ranges and consolidations. There's the breakout. All the breakout traders have got in. They typically have stops at the middle of the consolidation, because that's what the textbooks told them in the 1950s. They've just been stopped out. That's a liquidity grab. That's stop hunting. It's nothing personal. It's just the institutionals, just they're looking for liquidity. So that's what's just happened there. And look at that springboard and big spike here. I can only be bullish off that. So if I go back to where's the opportunity? Okay, Russell's down big and turning. NASDAQ's already recovering mostly. It didn't really have the same impact. Again, just looking at the percentages here, I've got to be thinking, I'm wondering if there's an opportunity on the Dow. I've had some good fun on the Dow this week. So I'm wondering if there's an opportunity to just drop down to lower timeframes and get a little nibble. Again, it's basically just pure support and resistance play. So I appreciate this is a little bit discretionary, but just thinking about the way that the markets move and liquidity is grabbed, it could be interesting to take advantage of that. Anyway, that's just what I'm thinking. So maybe there's a little bit of an opportunity, bullish, certainly intraday short term on futures, while there's a little bit of market movement and activity. Sorry, a little bit all over the place again today. The crash idea, the crash, should we be worried? Should we be concerned? No, we shouldn't. Again, if you are concerned, your position size is probably too big. If you are concerned, then you didn't prepare for it when you should have, which was 2 weeks ago. If you are still concerned, then again, just refer to the other answers. You're going to have to sit through a retracement. Now's not really the time to press the eject button on a sell-off. Again, I appreciate it looks scary. Everything's in the red. It's holidays. It's a shortened week. It's a shortened day for trading. So we don't really want to be taking any drastic action into a shortened trading week. These types of funny business moves, they happen all the time when the markets are around holidays, essentially. So again, I'm generally not doing a great deal this week, and certainly not worrying about closing the barn door after the horse has bolted. It's always too late to be doing something. Anyway, going back to the other points. Scenarios. Does everyone get the point about scenarios? It can be not necessarily abstract, but it can be a different way of viewing the markets. When you stop worrying about being right or wrong, what was my trade idea right? Well, let's define or redefine what right is. Let's redefine it as, did I follow my trading plan, my trading strategy, my analysis? Because if I did, then I'm right on average. It's not about being right and posting up and looking at the great trade and making money. Making money is a byproduct of following a process, just like any other business. So should we be stressed about the crash or the one-day correction? No, we shouldn't. Should we be taking action right this second? Probably not. No, we shouldn't. Should we prepare for it in the future? Yes, by following a structured approach, which always starts off with, what is the trend? When you know the trend, up, down, or sideways, it's going to help you to figure out what to do next and when to take action, because you're going to inevitably have opportunities to buy the dips, sell the rallies, buy range lows, sell range highs, buy the breaker range highs, sell the breaker range lows. When you've got that structure in place, it's going to help you plan your portfolio, help you plan for the possibility. Again, if you remember 2 weeks ago, we were looking actively for bearish candidates. If we wanted to prepare for it, I can very quickly look down my watch list and say, well, if I'm worried about a sell-off, if I'm worried about a correction, and we did this, if you remember 2 weeks ago, if I'm worried about a bearish move in the markets, maybe I can start looking proactively for bearish trades. So what this tool does here is it looks at the average price crossover and tells me from a mechanical viewpoint, again, come back to the slides, a mechanical viewpoint, mechanical viewpoint right there. Step one, mechanically assess. If I'm looking for bearish trades, we did this a few weeks ago. If I'm looking for bearish trades because I'm worried about a bearish sell-off in the market in the next couple of weeks, can I go actively scanning for bearish trades? Yes, we can. So I can go and very simply look for, has the 50-period moving average crossed below the 200-period moving average, which is right there. So I've got to have a mechanical bearish bias. Again, we've already looked at this. We've identified, there's my range. So now that you're doing this, mechanical evaluation, number one, I'm looking at a bearish trend. Well, number two, visual confirmation. Actually, it looks more like a consolidation. So that's what we've done there. We've already evaluated this earlier. It is in a range. Great. So now I know that. What's price doing? Oh, it's actually developed that little push pullback outside of the consolidation. So if you wanted to load up on the bearish side, this looked like a brand new bearish setup. And the one-day sell-off might be just tipping it over to start that next trending move. Great. So let's think about 3 entries, exits, stops, and targets. Entry below the pullback. It's already technically triggered. Let's get the exact number. The low there is 25.50. So you're about 40 cents into the trade. With the way that I trade options, it's always going to be one strike, the first strike out the money. So I'm looking at a $25 strike would be the first thing. That 40 cents move doesn't make too much of a difference. So I can basically buy the $25 strike and start thinking about this as a breakout move. Where could it get to? Again, let's keep things simple. If we're calling this a breakout, there's the, oops, there we go. There's the height of the range. There's the height of the range. There we go. There's the height of the range. Standard stuff, height of the range. And that's the break point, which is there. So your target's going to be a hair's breadth, cat's whisker, past $22. So $25 down to $22 on a $20 stock or $25 stock. Everyone happy with that? This is BHC. If you want to pinch the screen, Steve, you can zoom in. Use the scroll wheel, use the zoom button right there at the top left. So this is very easy to find bearish candidates. I think actually when we did this a couple of weeks ago, this was one of the first ones we looked at, and we said it's in the middle of the range. If you remember, it's in the middle of the range at the time. The range is too small to trade is what we did establish, which is why I've not traded it. But nonetheless, we've got a nice little breakout. So this looks like a great candidate. Standard stuff, breakout, pullback setup. Stop loss goes behind the pullback high. Easy peasy, looks good. So what else can we do? Let's take a look at some of the other stocks that we could do. We can look at Logitech. Let's check it out. LOGI. So average price crossed over. Bearish trend in effect. Price is rallying up to the 50-period moving average. Great. It's not quite there yet. I'd need to see it turn around before I think about an opportunity. So this is a sell the rally in a downtrend opportunity. Okay, it's not today. Don't need to worry about it. Let's check out OSK. So again, OSK, I'm expecting a bearish trend. That's what it said in the watch list. The average prices are crossed over. Now I'm looking at this chart, visual inspection. Don't know about you. It's not obvious. It's not obvious. Let's go. Let's leave it alone. Don't worry about it. Let's go and find something that is obvious. Starbucks, bearish. Average price is crossed over. It's only just crossed over. Now I'm looking at this chart. We've already established it's in a range. I've got to trade on from the range low to the range high. So all because I've got my average price crossing over. Sorry, just because I've got my average price crossed over doesn't mean that I should automatically be bearish. This is what the visual inspection's for. So I've initially got a bullish trade. It's not initially working out. I've got a little bit of corrective trade management. So I've actually got a long option short stock combination at the moment because I'm trying to manage my trade. Part of the process that I teach all my traders is corrective trade management, hedging tactics. So if this was to sell off, I don't need to put a new position on because I'm already managing the previous trade. So I should be able to make money out of this. Where could it get to? Just looking at that, $105. This could drop a nice little $5 move. I should be able to make some money out of that movement. If you're looking for a brand new trade, well, guess what? Wait for the breakout. It's just breaking out 110. Wait for the pullback. It's not developing. So you've got a bearish candidate on a breakout. I just don't need to do anything with it because I'm already doing something with it. But if you're looking for a brand new trade, it's not an automatic sell alert, but it's going to be on my radar. Maybe Starbucks is a good bearish candidate. So wait for the break. It's just broken. Wait for the pullback. It's not developed. The great thing with what we do is, when I say what we do, swing trading, is we never really need to be in a rush to do anything. If you follow a process and you go through your stock, this is US Steel. So the average price is crossed over. We're in this messy, sloppy consolidation. It's in the middle of the range. Don't need to worry about it. When you've got a process, again, all I'm doing is looking down the ones that say bear. So the average prices are crossed over. Check out Blink. So Blink is in a range. So the average prices are crossed over, bearish, but we can see visually it's going sideways. So I know that I don't need to worry too much about the about the moving averages. So we've got the range marked off. Guess what? I think we looked at this last week, actually. Nice little V-shaped pattern. If you didn't get that one, we've got that one. So we can trade it from the range high, can trade this down to the range low. So if you want to look for a brand new bearish trade, there's one right there. This is Blink, BL, Blink. Here we go, Blink. So that looks interesting. Bearish trade setup, reversal off the range high, one of the 6 money making patterns. Check out Crisp Therapeutics. Already had a trade on this, unsurprisingly. Average price crossed over here, but visually we can see we've got a consolidation. I marked off the slightly shorter term consolidation at the time there. You can see my trade entry watermarked out. My exit was there. I'm waiting for the next rally in the downtrend to participate in the next trade on Crisp Therapeutics. We went through this in real time at the time, if you remember, again, back in late September, early October. So again, we can proactively find good trading opportunities. Again, another trade that we've been trading bearish. Average price crossed over. You've had the retest of the 50-period moving average. Again, I was already in the trade from over here, so I didn't need to worry about it. But price is running down nicely, expecting a move to $15. So if you're already in a trade, it should be fine. Again, if you've got a portfolio of opportunities that you're looking at, there's always going to be a balance of bullish trades and bearish trades in a two-sided market. So it's even more important to think about just a small universe of stocks. Again, my universe, it's about 80 stocks. I'm only looking at what I consider to be the best 80 stocks. Let's take out Penn States. Just in the interest, I've not actually traded this. I missed the boat on this one. Prices in a range. It's just broken out. Again, I can't say that I took this trade. It's set up, but I was just doing something else. But nonetheless, it just illustrates what we've been talking about. When you know what the trend is, it's in a range. There's the breakout. There's the pullback. It's not really going very far, very fast. So arguably, I would say I've not really missed a great deal, even though I did technically miss it. Let's check out PayPal. PayPal's technically in a bearish trend. Had some good trades on this. Average prices crossed over. Not really seeing a decent rally into the moving averages, so no big deal. Has broken out. I've profited handsomely on this. Now, here's the thing. I profited on this, but it's been on bullish trades that haven't worked out. With the corrective trade management I've applied multiple times, this has turned out to be a hugely profitable trade, but on bullish trades. So it's coming back to what I was saying before. It's not about being right. It's not about, look at the trade choice that we made. You can make money by being wrong, if you like, because you're applying trade management practices that hedge funds use. Where are we? Let's check out QVRO. We'll do 2 or 3 more and then we'll wrap it up. So QRVO. Average prices crossed over. Visually, now I'm looking at this chart. It's in a consolidation. We've got multiple crosses. We've already looked at this and marked it off. So there's the range. We've got a breakout here. It's just technically triggered. So if you wanted to get a little bit of bearish exposure, QRVO is another good stock to consider because it meets the setup requirements. And you'll notice I'm not chasing a bearish move. I'm looking for new opportunities that might take advantage of bearish movements if there's going to be further bearish movements to enhance the portfolio. If you're trying to fix bullish trades gone wrong, you can't lock in profit that disappeared overnight on a big gap down. You can't fix the trades that are already broken. If you're already past your stop loss levels, I don't know why you wouldn't close trade. Or if you've got max loss on the if you trade with options, which is what I normally suggest, your risk is already taken care of. But if you're looking to try and turn things around and take advantage of bearish moves, look for new setups is the way that you fix shitty market conditions, underperformance. You look for new trades. It's not about trying to another thing that I think about is I don't want to manage losers. I don't want to manage losses. It's hard work to manage loss, try and fix a broken trade. There's nothing worse than managing losses. Wouldn't it be far better to go and look for winners? Manage the risk on the entry, reduce your position size, use stock options so your risk is always defined on the entry, and it frees you up to go and look for new opportunities. This is one we looked at there just surprisingly 2 weeks ago in preparation for bearish move. So run is having a run from the range high down to the range low. Space we actually left, it looks sloppy, it looks horrible, looks messy. T-Doc is breaking out. So here's the range. There's the breakouts. So there's your pullback. It's gapping higher, trading lower. So you've got your first pullback after the breakout, a little bit of negative news. So it's preparing to set up further move down. So TDOC looks lovely, actually. I've not got anything on TDOC, so let's just pop that in the little reminder here. Maybe I'll do something with TDOC. There we go. Let's do something with that. So that looks interesting. Where are we? Zillow, already had a good trade on Zillow. Prematurely exiting. What can you do about it? Average price crossed over, range, another range. Again, traded the breakout, closed my trade there. A little bit of further movements, waiting for the next rally into the moving averages, which is what I prefer to do. So we've got a couple of interesting trades there. Again, one or two which look good. Most of them, I've already got a little something on or exposure. The one that would be brand new for me, or the two that would be brand new rather, you can look at a BHC for a bearish trade and TDOC, which both look very interesting for me. So I think that's it. It's almost time, but those two look quite interesting on the new idea fronts. So when we have, again, coming back to the point, when we have a process, we should be focused on looking for the opportunity. In this case, we're just focusing on the bearish side. You know, get a little bit of exposure on the bearish side. My trades have been managed. I've got corrective trade management. I've got bearish exposure already. But if I want to go and look for new bearish trades, if I'm worried about further downward movements, then these make the most sense. Because they're setting up bearish entries already, it makes sense to look for bearish trades for new opportunities and go and take out new trade ideas and look for more exposure and have a more balanced portfolio, rather than try and figure out how can I fix bad trades, how can I fix trades that are not working out, how can I close the barn door after the horse has bolted, as it were. You know, if you're trying to chase the move, it's not going to work. It's not going to turn out nicely. You want to be preparing for it by having a process that works. Again, for 2 weeks, we were talking about the bearish side of the markets because we were prepared for the bearish side of the market. We saw that as the primary scenario. Again, it's not that I'm right or wrong. We had a secondary scenario that if it went up, we were equally looking for bullish trades, but we just had less confidence in them because the way that the charts were unfolding, they were suggesting a downward movement. Again, if there's more downward movement, that's great. We've got exposure on the bearish side. We've got some corrective trade management in place to manage the trades that are not working in the way that I would like. And so if there was a hard and fast downward movements, that would actually be beneficial just with the way that the trades get managed. And again, we've also got brand new trades which look really interesting. So if I want to top up the bearish side of the market, then that would be cool as well. Right, I think that's all I've got lined up for us today. Again, I'm not seeing anything to get excited about. Again, all my management is mostly done. There's one or two trade opportunities which I may consider, to be honest. But because of the shortened trading week, I don't often do a great deal, because there's usually not a great deal to do. It is actually unusual, in fairness, that there is such a big move going on days like today. But that said, it's planned for, it's prepared for. It's no big deal. I've had a little bit of fun on futures. So I've already been taking little nibbles and bites out these moves on futures in the same way on lower time frames. But yeah, shouldn't really be anything to worry about. Right, folks. So we've seen the production line process in action. Mechanical scan. This time we were looking for bearish candidates. So mechanical assessments, because of, well, a little bit influenced by the markets. We then want to confirm visually if we're expecting to see a downtrend or a bearish movement. Like, am I actually seeing that? Am I actually seeing a bearish movement? So just because the indicators tell you one thing, don't think that it's an automatic sell signal or sell alert. So you want to visually confirm what you're expecting to see. I run my lens through the filter of the bearish, bullish, bearish, and the range. There's 6 patterns that I can look for, and all I'm really looking for is, do I see one of those money-making patterns? Because if I do, then I can move on to the trade craft, the entries, the exits, the stops, the targets, and look for a trading opportunity that would enhance my portfolio based on what I'm looking for. So that's it. So that is the production line process. Ran through the lens of crash test stupid. Again, don't worry about chasing moves. Just trade your strategy. I think the thing to keep in mind with the narrative that you're probably seeing in the media today, other than Thanksgiving and the markets are crashing, are they really crashing? Just some final thoughts. I've done studies on this. The markets don't crash that often. Like huge 20, 30%, like we saw in the COVID crash, they happen about once every 10 years. So just keep that in mind. A big stock market crash happens once every. If you go back, the previous one was 2008. If you go back, the previous one was 2001. If you go back, every 10 years, something funky happens in a huge way. Maybe it's nationwide, maybe it's global, but there's usually a legitimate crash once every 10 years. There are steep corrections, for want of a better description, about once a year, once or twice a year, usually February, March. There's anything more than 10% is what I'm going to classify as a correction. A 10% correction or more in a 10 to 15 day period, so a short space of time, happens once or twice a year, usually around February, March, or September, October. Historically, that's usually when they happen. Again, it's kind of cyclical in nature. So I wouldn't necessarily say that this is a huge crash or a huge correction, at least not yet. But the reality is they don't happen that often. And we're only, 1 to 2% into the movement for today so far. And given the current volatility that we've seen this year, that's not a big move. It's not really a big move. And so it's at the upper end of a normal range of movements. But when we start getting past the 2.5% move range, that's when I would start thinking about, okay, maybe something more is going to happen. Maybe we're going to see up to that 4% move in a single day. But until that happens, I'm not necessarily concerned about it. And again, with the way that I manage and teach all my traders to manage their portfolio with the hedging tactics and strategies, a crash is actually going to be really good for my portfolio because I'm going to make more money by being wrong because of the hedging and the protections that I've got in place that are going to kick in. And that's a great place to be. And this is why I'm not necessarily worried about anything. And that's what I try and do. So crash test stupid. Again, don't follow the media. Don't fall to the narrative. I've just realized that this looks like Zuckerberg. It's meant to be a crash test dummy, not Mark Zuckerberg. It doesn't half look like him, doesn't it? Don't panic is all I'm saying. Follow a rational, logical thought with your strategy based on your portfolio. And everything works out in the wash. It really does. It really does. So don't close the barn door after the horse has bolted. Peter, I'm just picking up on your comment there. Thank you for your kind words. Don't chase. It's super hard. It really is. Again, I'm not saying that I'm immune to it, because I'm not. I'm human just like everyone else. But that's what these rules are for. That's what my production line is for. It's to make sure that I follow the rules and the process, to keep me. They're checks and balances for me. It's just you get to benefit from my 28 years trading because I'm trying to keep myself on the straight and narrow. So that's really what the for more than anything. Where are we? We've already done that. Okay, cool. So what was your biggest takeaway, folks? What was your biggest takeaway? Again, Peter, thank you very much for your kind words. Randall, run a race, not a drag race. I like that. I might have to swipe that. That's funny. I likes that. So what was your biggest takeaway today? Run a race, not a drag race. I like it, Randall. I might like running a drag race though, Randall. But yeah, just going back to your comment, Peter, it's hard, the emotion, and despite my aloofness to the way I approach the markets these days, keep in mind, it took me 28 years to get here. When I first started out, I was a very emotional trader. I'm not going to deny that. And arguably to this day, I still am. I still prey to the same emotions that everyone experiences when trading. It's just that I've learned to deal with them. I've learned what works to minimize It's almost like the little voice, the devil and the angel on your shoulder, and both of them are horrible. Do that, just do this, it'll work out perfectly. Just do this, and on the other shoulder, it's no, don't do that, it won't work out. The constant struggle with each other. So the best way of thinking about that voice at the back of your head that said, just do it and see what happens, aka make it up as you go along, to try and turn that voice down, that emotional reaction, that the simplest, the quickest thing that anyone can do to keep the emotional reaction, the emotional response, the emotionally charged decisions, the FOMO, the hope, the fear, the greed, all the things that you've experienced. The single thing that you can do to fix that, Peter, and anyone else who's in a similar situation, because I know you've all experienced it, including myself, is turn your position size down. Reduce your position size down to a sleeping level, that point where you can sleep at night. And that phrasing is from a book that's over 100 years old. My favorite book, Reminiscence of a Stock Operator. Reduce your position size down to a sleeping level, meaning that if you're staying awake at night, if you've got sweaty palms, if you're emotionally reacting to the situation, your position size is too big. And if you can manage the risk on the entry as well, that's what we said earlier. Again, the simplest thing that I do is to use stock options. If you're not familiar with them, they're just like a deposit. The worst that can happen is you lose your deposits. So I can manage my risk on the entry so that if while I'm out later, the market does genuinely crash and pukes, like, I'm okay with that. Firstly, some of my positions are going to make a lot of money. The ones that don't, it's fixed risk. I physically can't lose any more than the deposit or the option. So that's how I'm dealing with it. And it's a huge weight off my mind, not knowing if my exits, my stop loss order is going to be executed. Imagine all the people that woke up today with the stocks and the stock market gapping lower and jumping over their protective stop loss orders, not knowing if they're going to get filled or where they're going to get filled. They can maybe take an extra 10, 15, 20, 30% loss on their portfolio, or maybe they cancel the orders overnight and hoping that it's going to work out. And they turn their trading hypothesis and they suddenly become accidental investors or bag holders because they've not got some structure in place. So give it some thought. Reduce your position size down to the point where you can think and operate rationally. If you focus on how little you can lose, then you'll always be able to make rational decisions. And this is the difference between, certainly from the mindset point of view, is the newer trader tends to focus on how much money they're going to make. Look how much money, if I traded with this position size, and I'm right, there's that word again, and I'm right, look how much money I'm going to make. I'll be able to retire. And it's a huge attraction. But what I'm saying is that you'll get lucky once or twice doing that. We've probably all got lucky doing that once or twice. But if we focus on how little we can lose, and this is what the professionals do, the institutions, the banks, the investors, they're looking at managing risk. And it's not unique to trading. It's, if any of you business owners that are watching today, it's how you operate. It's like, let's manage the risk. Let's control the risk. If you de-risk a situation, if you can reduce your exposure, these are all phrases that are commonly used in multiple industries around the world, not just the stock market. But if we focus on how little we can lose, and if we can de-risk that situation by taking a small profit, locking in profits at some point in the future, now you've got a risk-free return. And that's a great place to be. So focus on how little you can lose and not how much you can make. Manage the risk and follow a process, because that's just what every other business does. Awesome, Peter. Peter's just put some extra comments there. How about one or two of the new people? Because I see you lurking there in the corner. You got any thoughts before we hang our spurs up? What about you, John? I'm looking at you, mate. Awesome. But plan ahead is the key, yeah. I think it's like, again, just going back to that, like, I don't know what's going to happen tomorrow any more than the next person, as we illustrated. But 2 weeks ago, we were talking about a market sell-off, not necessarily sell-off or correction. That kind of suggests that I knew that one day big move was going to happen. But we were planning for the possibility of a downward movement as the primary scenario. It should not have been a surprise that it happens. The only thing that is a surprise is the speed of movement. That's always going to be a surprise for us. But the fact that the primary scenario happened should not be a surprise. Anyway, I have a good place to live. So plan ahead. Always have a plan. If you don't have a plan, then you don't know what you're doing, and you want some help with that, then you can work a little bit more closely with me. Before we do that, though, thank you. Once again, thank you. I'm thankful every Friday. I don't wait once a year to be thankful for still being alive on this planet that we call Earth. Thank you. We could all be doing something else with our life, especially today, where it usually is a time for family, for friends, for loved ones. So, thank you from the bottom of my heart to decide to spend it with me. I really appreciate it. And it never goes unnoticed. So thank you for that. I trust that you've all got something of value from it. And if you have, I would hope that you could, where are we? Take action. There we go. The only thing that would, the price of entry, as someone said last week, is that you get involved and you take action. You just put into practice what you've learned. That would give me no end of pleasure. And if you do it, let me know. Let me know what you've done and your results and your success. We can share it with the group, the community, and just generally just help lift each other upwards and onwards. Because it's otherwise it's a very lonely business, and it's very easy to make mistakes. And even though we might not have a formal relationship together, just know that I'm gonna do the Hogwarts thing again. Just you always know that if you're a trader, help will always be given to those who ask. So if you get stuck, I'll always point you off in the right direction. And that's been my promise for the last sort of 30 years now. I never had that when I started out. So if you need it, it's there. If you do want to work on a more formal relationship, you can and are invited to work with me. I have a group. I've got no space for one-on-one mentorship at the moment, and maybe not at all. I'm moving away from that in the short term. Obviously, we're winding down, going into Christmas, so I want to do other things. But I do have a group. Group Accelerator is the best way to get the most out of it. Everyone who's involved in it are seeing great results, or certainly making significant strides in their development as traders. And so if you do want to do that, then just go to production9trading.com. If you want to type that into your browser, you'll be redirected, or you can go to AntiVestor.com, which is my main website, or basically just click on any of the links that you receive from me. The best way to learn how a portfolio is being managed is to see a portfolio being managed, which is what I do. In addition to this free Friday session, it's what I do twice a week in the week, and I'm available for questions and answers all through the week. So that's it. That's my invitation to work with me. Where's my slide? So there we go. So we'll finish on a thank you. It's that time of year where it's on everyone's mind. As I say, I like to give thanks every week. I had a near-death experience, as most of you or some of you may know. I'm quite literally thankful for every day that I survived. I've had quite literally an extra 25 years added to my dance card just because I decided not to give up. So, every day is precious to me as far as I'm concerned. I like to enjoy myself. Hopefully, it just explains a little bit of the way I am. I like to have fun and go out and do things and enjoy life, and it's for that reason. There's nothing worse than having a priest stand over you giving you the last rites. It's a little bit depressing. So what I would encourage you to do is just think about those who are less fortunate than you. You may be in a bad place. You may be wanting better things for yourself, but there are other people that are worse off this time of year. So just give some thought, some thanks, and maybe just go and spend some time with those people who just need a little bit of help and a little bit of time spent with them just to put a smile on their face. So with that said, have a great day, have a wonderful weekend, and I'll see you all next week when we do it all over again. Till then, bye for now.